And in our top business story, the UAE has ranked 25th in a new global retirement index, with its retirees outperforming several Western nations, including the United States of America and Britain, in key indicators. The global findings of the index, which was compiled by the global asset management Natixis, analyzed a total of 150 countries and suggests that retirement security is uncertain for most retirees, given unsustainable demand for government resources and macroeconomic factors that affect the value of retirees' savings, which place more responsibility on individual investors for their own welfare in retirement. The UAE's high level of employment, quality of life and stable economy all contribute to the country's ranking. The UAE's Material Well-being Index, which measures income equality, income per capita and unemployment ranking, is joint fourth, sharing its high score of 84% with Austria and Luxembourg. The UAE's income per capita in 2014 was $58,000, according to figures from the World Bank, coming in 10th out of 213 countries. The 2015 Global Retirement Index rankings shows the UAE's stable performance among the top-ranked countries as compared to 2014's report, which highlights the role played by a stable, growing economy, high earnings and progressive public policies in the security of retirees. Telecom operator Du said on Tuesday that a long-delayed deal on network sharing to allow competition in broadband, TV and landline services in the UAE has been agreed and should be effective by the end of the year. Negotiations between Du and its larger rival Etisalat have dragged on since early 2009, even though the federally run Emirates Investment Authority is the largest shareholder in both operators. The two companies offer fixed-line phone, broadband and television packages in different districts, with Du largely confined to Dubai's newer areas. Network sharing would allow them to compete in the same areas. Du's chairman Ahmed bin Bayat told reporters on the sidelines of the government summit in Dubai that it is just a matter of a couple of months for the agreement to be put in place, as the legality has been sorted out. Bayat also hinted the UAE could consider licensing internet service providers, which is common in developed markets, as well as mobile virtual network operators, which do not own networks but instead lease capacity from mobile providers, adding that the aim is to get more services to the public in a more competitive and seamless way. Jumeirah Group, the Dubai-based hotels operator, plans to almost double its hotel portfolio to 42 by 2018, shrugging off geopolitical tensions such as the Ukrainian crisis and the economic risks in the Eurozone and China. The group's hotels in Dubai, which account for most of its revenue, are operating at 80% or higher occupancy, which is very satisfactory, according to its president and chief executive, Gerald Lawless. Jumeirah, which is part of Dubai Holding, currently has 22 hotels in its portfolio, including those it manages rather than owns in markets such as the UAE, Kuwait, China, Britain and Italy. In a local report, Lawless was quoted as saying that the group plans to open another 1 or 2 hotels this year and 20 in total by 2018. This comes as the group announced on Tuesday that it has signed an agreement with Sheikh Surur bin Mohammed Al Nahyan to operate a resort on Saadiyat Island in Abu Dhabi. Expected to open in 2017, the hotel will comprise 294 guest rooms, including spa suites, presidential suites and private high-end villas. Additionally, the company in the process of opening a hotel in St. Petersburg, as well as seeking opportunities to open one in Moscow. While Russia's economy is widely forecast to shrink this year because of the slide in oil prices and Western sanctions against Russia over the Ukraine crisis, Russians have accounted for a large chunk of tourist flows to Dubai in recent years, with Lawless stating that the company hadn't seen a significant change in Russian visitor numbers, mainly because its guests were wealthier Russians who were less affected by the decline in the ruble. Dubai-based Emirates NBD Bank has so far attracted orders of over 175 million Australian dollars for its 7-year kangaroo bond issue, the longest maturity to date for a Middle East issuer in the market. The bank is marketing the Australian dollar-denominated 7-year notes to yield about 225 basis points above the swap rate, according to documents from the lead arrangers, Deutsche Bank, Emirates NBD Capital, NAB and Nomura. The books closed today at 12:45 p.m. Sydney time. Kangaroo bond issuance is surging this year following record volumes in 2014, with the Emirates NBD's offer following a raft of deals since 2013 from other Gulf-based lenders, including First Gulf Bank, Abu Dhabi Commercial Bank and National Bank of Abu Dhabi.